Hey, Johnny, we are back, man, for another great episode of your podcast. Is the day treating you well?
It is, man. It's going
Yeah.
good, and today's cool. We should have birthday cakes for today. You can tell us what we're going to talk about, but I
Yeah.
didn't even think about it. The little birthday hats and the little things you could.
Yeah.
We're going to
There's
talk
a
about birthdays, right? I mean, tell
absolutely,
me,
yeah.
man.
I started the day, Johnny, picking up my granddaughter. She's a year and a half old. And actually she's a year, that'd be 18 months. She's actually 19 months old today. This is her 19-month birthday. And when they're little like that, we like celebrate every month, right? Until they hit like two with little celebrations and just fun things, just to say this is really cool. And as we go through life, birthdays are for some people, most people are kind of a big thing, but there's a specific birth date that is important when people are thinking about retiring at new heights and planning out the rest of their years and income and the power of zero. And that birthday is at 59 and a half. So the half birthday between 59 and 60, there's something special about that date. Why don't you tell us about that birthday celebration? What's going on there?
Yeah, there's like a lot of big days for our life that are really cool birthdays, right? We get to that, 10 years old, whatever it may be, 25, you get to 50.
Yeah.
On the financial world, in the IRS world and retirement world, like you said, man, 59 and a half is a pretty cool birthday.
Yeah.
A lot of people don't realize it and some of the things you could begin to set up. I mean, when I was a little kid, birthday, it was like birthdays and Christmas, right? Those were like I
That's
look
it.
forward to it. And so, like my birthday's on the 12th of September. So when I was a little
Yeah.
kid, like it's like March 12th, I'm 1 year or, I'm 5 years and 6 months old, or I'm 5 years and 7 months only, and so you think that way, like getting closer to my birthday. And
Yeah.
when you get close to 59 and a half, that's like time to be like, okay, I'm coming up to 59 and a half, and I got some options and decisions, not having to wait till I'm totally retired
Right.
at 65 or 66, I can begin to set myself up at 59 and a half on that beautiful birthday. The IRS begins to open that door to be able to do what? Potentially buy them out
Yeah.
or set yourself up to do it down the road. Um, and a lot
Because
of people don't know that.
Yeah, because we were talking in the last episode about you're really in a business partnership with the IRS with Uncle Sam, and when you have this tax deferred middle bucket, a traditional 401k program from your employer, and because Taxman Max, Uncle Sam, whatever you call him, has deferred his compensation. You didn't pay him taxes. He's ready for his money sometime soon, but there is an opportunity to start buying him out to put your money into that third bucket we talked about last time, that tax free bucket. That's what you're talking about buying out,
Yeah,
right?
it's a birthday celebration.
Amen.
And we've actually had folks come to us now, believe it or not, by kind of preaching this and talking about this through our classes and seminars we've been doing for several years now, because we bring it up. We've had people actually call and be like, "Hey, I'll be 59 and a half in like 3 weeks, and I want to be able to come in and talk about what we can do."
Mm-hmm.
So what is the rule? What can you do? I have my 401k at 59 and a half. Whatever your work plan is, you're allowed to be able to have more control of that money a little bit. And you potentially can say, I want to do an in-service rollover, transfer money from a 401k at work to my own outside plan. Okay. What can that
Okay.
outside plan be? It could be a safer vehicle for your funds. It can be in the different stocks you might be able to pick yourself or have more activity, more active involvement in. It could be into things like income annuity streams, all kinds of things like that that are available that you can do with that money. So I want to get a little safer with my money. Okay, I can move it over here and put it into maybe like an index annuity type thing. I want to set myself up for a lifetime income, begin to grow a pension on myself. I can put it over here into a vehicle like that. I want to control more where it's invested. Okay, I can put it over here like that. Once that's set up, then we can begin to look with you and be like, okay, what's a long-term tax plan here? You
Yeah.
have control over this money a little bit more than your company.
Yeah.
Now, how can we get you more in control from the IRS? And we begin to do these tax planning reports. And they're exciting because we show people, hey, if we begin this process, this is how it looks for you 5 years, 10 years down the road. It's long term. You got to think long term. Don't think tomorrow.
That's
And you
right.
don't have to wait like till 6 months before you're retired to start figuring this stuff out.
Well, and I want to, you keep using this phrase that I really want our audience to understand. And you say, you keep talking about tax planning. And I want people to understand that this is not the same as a CPA or a tax preparation place that you may take
No,
your money to at the end of the year or whatever. This is looking forward to say, how can I save money on taxes versus, well, here's what I earned last year. What do I need to do? Right.
exactly. Yeah, this is about your retirement plan. And remember, your retirement plan should start with a tax plan, right?
Mm,
Because what do you want to know? Um, how much I'm going to keep of my money, right? And how long is it going to last? A
yeah.
lot of those things are totally determined by what your taxes are going to be paid out of it,
Yeah.
right? That's, if you don't know, like, man, how much of this do I actually get to keep? How can you know how long it's going to last for,
That's right. That's right.
right? You just
Yeah.
can't. So, regardless if you do things like Roth conversions or not, I'd rather know. Like, hey, this is what my tax burden looks like it's going to be the next 20, 25 years of my life. At least I know I deal with it and I can figure things out.
Yeah.
Or I have
Exactly.
a plan to be like, okay, this is what it's going to be like, but I can make it like this
Yeah.
by doing like my Roth conversions and things like that.
Yeah.
And
And on Roth conversions, the other thing we want people to understand is you don't have to convert everything at once. In fact, many times that's not a great idea because you taxes and things, but you've got to have a plan in place. So your tax plan that Johnny's talking about is part of an overall retirement plan that says you may have a $500,000 in your retirement plan at work because you've been there for years. You may need to meth, methodically. That's the word I was looking for.
yeah, good job.
Methodically
Yes, that's a
take
tough
a
one.
take a Roth conversion every year for the next 5 or 6 years or something like that. Is that right?
Yeah, you do partial conversions.
Yeah.
Remember, you begin every little year to buy out your business partner, buy out
Yeah.
that IRS,
I
small
love that
pieces.
idea.
That's
Yeah.
kind of how people do in business world, right? They sometimes
Right.
they don't, I don't have all the money to pay you 40% and get out of this,
Yeah.
but over the next 10 years, I'm going to start to pay you 5, 6%
Yeah.
and begin to buy you out. And imagine if the business partner couldn't stop that from happening,
Right.
right? That's what the IRS is like right now. They can't stop you from doing that,
Yeah.
you know? So 59 and a half can be one of your most important birthdays for the next 20, 25 years of your life, especially on the financial side.
Yeah.
So,
Love it.
we think about 50 and like I said, all these things, 60 or whatever, but man, 59 and a half is a big deal. So don't think if you're working like, "Well, I don't plan on working for another 5, 6 years, whatever, right? I just keep doing what I'm doing. Stop, celebrate your birthday, and
Mm-hmm.
take a look at some of the presents you maybe can give yourself. You know what I mean? And
Yeah.
and check it
Exactly.
out. And I'll give you one more tip real quick, Mike,
Okay.
is that if you are working, I promise you, go check with your company you're at. Ask them if you have a 401k, hey, is there a Roth option to contribute inside this 401k? Most of them are developing that now for their employees, and a lot of the employees don't even know,
Yeah.
right?
Well,
They
that's a
don't put it in their
great,
big banners.
buddy. That's worth the price of admission today. Because if you could even today start contributing to a Roth account versus a traditional, you're going to save so much in taxes. You're going to grow your money tax free, and you're going to have a lot more in retirement. That's a great tip, Johnny.
Absolutely, man. So, like last week, you talked about later is greater, and then
Yeah.
this week I'm trying to outdo you with that one.
I love
So,
it.
usually
Yeah.
you come up with the best one-line nuggets,
Yeah.
but
Later is greater. Yeah. I don't know. We'll find something for that one. Do it now. Be like Nike and just do it now. Get your money into a Roth.
I don't
And
forget what you say. I don't
I
forget it. Hopefully, the people watching this or listening to this don't either, because that was worth. You said the price of admission. That was too.
There
That's
you
in my
go.
mind. That's in my
Awesome.
mind now.
All right. Well, what should be in our audience's mind is sitting down with you, Johnny, because you got the team, the tools, the tactics, the background, the experience to help them leverage this power of zero and start buying out their business partner, Uncle Sam.
And it's a
Over.
no cost program we work with people on. No
Yeah.
cost, man. We want to show you what your tax situation is going to be. So, man,
Yeah.
we encourage you to give us a call or whatever, because this is what we're passionate about and I love working on. So, yeah, we'll do it,
Awesome.
man. We'll catch you next week for sure.
Okay. Look forward to it, Johnny. Take care, buddy. God bless.
You too.
Recording. Johnny, we are back. We are back to another episode of your podcast. How are things going in Michigan?
Going good, man. We're excited. Summertime, baseball's going. the grill's working here,
Yeah,
and so it's that 3 months we get.
that's
We get all
right.
4 seasons, and we got about 3 months of this. So try to take advantage of it, go camping, and do all the things we like to do. So it's nice, man, but it goes so fast. It
It
goes
does.
so
It
fast, and
really does. And
it's
that's
like,
why we got to make sure that in retirement goes pretty fast too. And to enjoy every single moment, you need to spend your retirement years not worrying about money and taxes. You need to talk with Johnny so you can retire at new heights and set yourself up so you have no taxes, no losses, no worries. How in that world is that possible? That's what we're doing in this mini series. And Johnny, we've talked in the last couple of episodes about a really big birthday of 59 and a half. What happens there? We've talked about traditional IRAs and Roth IRAs. We've talked about giving money to your kids. And today we're going to talk about a topic that I love.
mm-hmm,
And I think a lot of people will love it once they start
you do love
understanding
this.
the power of a properly structured life insurance policy because of the power of zero. So, why don't you talk about that? Everybody, I'm going to tee you up. Everybody talks about life insurance as far as the death benefit. So, let's talk about that as the power of zero. What happens there when you pass away in that life insurance money? But then I want to pivot to the living benefits of life insurance.
Yeah, so we've been going on this series about the power of zero, and talking about who controls your money and all that kind of stuff. And, you know, why are we pushing on this so hard, I believe, is because, man, those years go fast. And if you don't make the decisions earlier on, it's harder to make the decisions later. It's
Yeah.
harder to get your money in the third bucket. It's harder to get life insurance because you're older, health problems. So we try to say, hey, let's begin to process this as early as we can. If we're doing it a little later, we just have to deal with it, but it still benefits us greatly. And I want you to think, remember, we've got about a 20-year window. I'm using 65 as retirement.
Yeah.
20-year window, right? That if we're 65, we got another 20 years. How fast is 20 years, man? 20 years ago was 2006, right? Isn't that crazy?
Yeah.
How
Wow.
fast does
That's
that went by?
crazy.
I mean, it went
Yeah.
by, I love the movies and stuff. In 2008 is when the first Marvel movie, Iron Man, came out. I
Really.
cannot believe that that is 20 years old almost. Isn't that
Yeah.
crazy?
It is because they
And it
probably
went
have
by,
they probably have 20 Marvel movies, don't they?
yeah, they got like 30 of them, but I remember when that came out like it was yesterday. So
Yeah.
what am I saying? This retirement thing of 20 years, man, it goes fast. And it could be a little longer than that.
Yeah.
So one of the vehicles is we want to control as much as we can, and we
Yeah.
want to pay zero on taxes.
Amen.
Life insurance is a vehicle. Death benefit is one of those things. What is good about the death benefit? Well, obviously, we don't want to die, but we're going to one day. But how does it help our family? Because that's what it's all about.
Yeah.
It's tax free. And I'm not just talking like $15,000 here for burying you. Those are final expense. If you have those and that's all you can get, keep it. Great. They
Yeah.
need it. Anything tax free. But we're talking about planning, using
Yeah.
some of our funds that we have saved or whatever to make our money more valuable when something bad happens. So the first part, death benefit. How does that help? Remember, we're losing income when someone dies. If you're on Social Security, the lowest Social Security goes away. So life insurance can come in there and help fill a gap, give the spouse that's left a kick of income that's tax free. Okay. So, boom, that's one thing that can happen. That is going to happen to everybody. Let's just face
Hmm.
it. That's going to happen to everybody. So, that's setting up your spouse or your kids or
Yeah.
whatever it may be for that aspect. Okay. We all know that. That's a reason you get it, though.
Yeah.
That's a reason maybe you even take some money out of your savings if you got a lot sitting in there doing nothing and use it to purchase one of these permanent insurance policies. All
Yes.
right. To make that $50,000 worth more. Because it's just sitting there, and you're like, I'm just going to leave it to my wife or kids, whatever. Okay. Utilize that to do something like an insurance policy. The living benefits, though, is where it really gets exciting from the aspect of how it can help you. Once again, something bad has to happen, but that's why
Hmm.
we buy insurance. We have
Yes.
car insurance not because it's nice to drive around and it pays us if we drive good. No, it pays us when something bad happens
That's right.
and it takes the pressure off of us. Life insurance,
Amen.
die, takes pressure off your family, spouse. If you get sick and you need help taking care of yourself, it can be a vehicle to take pressure off yourself to be able to fund that. Okay,
Hmm.
be able to fund that because most of these permanent policies now have what's called accelerated benefit riders. All that means is I got this pot of money that someone's going to get when I die, but if I got sick where I can't do some living activities, now I can dip into that pot of money, usually tax free,
Yeah.
and use it to help cover these benefits. How does that help you, Mike?
Wow.
Well, if all your money's in the middle bucket,
That's right.
when you dig in that middle bucket we talked about that's tax deferred,
Hmm.
you need 120,000 to be able to use 100,000.
Right.
Or life insurance, it's dollar for dollar. Whatever it is in there, you get and you
That's
get
what
it tax free.
that's right. Yeah.
And it starts with paying this much to get this much tax free,
Yeah.
right?
Eh,
If you're relying on the middle bucket, remember, I need 100. I have to take out 125 or
That's right.
130.
That's
Okay.
right.
So it's not dollar for dollar. So
Okay.
that's one of the things. So
So that's
isn't
that's
that
what we call
cool?
the yeah. Well, it is totally cool when people really grasp life insurance on what you're talking about here, the death benefit side, and even the benefits while you're living if you need them. It's just you've talked about it. You put in $1 and you get back 20. It's just crazy the leverage that life insurance properly structured can really bring to you. But there are some living benefits that can play into even potentially helping with lifetime income at a tax-free level. Going back to this power of zero, where you would have no losses, no taxes, and no worries
Hmm.
when you use a properly structured life insurance policy as part of your retirement plan. Talk about the living benefits that somebody can really benefit from when they have a properly structured life insurance policy.
Yeah, so here's how it works is whether it's a monthly payment you're paying or what they do is what they call a lump sum. So once again, I got a chunk of money and I'm like, okay, this money is doing nothing. I was gonna use it for emergencies, like if I get sick or if I die, my kids or wife will get it. Okay, so take that lump of money. Let's put it in this pocket over here, which is going to be for life insurance. Instantly, it's worth more if you die. Instantly, it's worth more if you get sick. But also, we can still access the money by doing policy loans to help with income streams if we need to.
Yeah.
It's tax free. Now,
Yes.
here's the secret to all this, how this works, is you get to use your money twice. What do I mean? So I put money in there and say there's $50,000 of what they call cash value. All right.
Okay.
It's grown every year. There's different ones we can talk to you about how it works, but the bottom line is it's grown every year. I want to take out $15,000. Okay. I do a policy loan. I take out $50,000. So it went from 50 to 35 is what's now in there, but I still get paid interest on the $50,000.
Yep.
Okay. Think about that. Now I have one of these things, and if we took money out, and some of these things are paying, they have these caps. Ours is getting 12% the last few years,
That's
12% interest.
that's
So if we
crazy.
take out 30,000 and the loan interest is 4,
Yeah.
I'm getting 12. I've used my money twice, man.
That's
You
right.
can't do that with anything else. If you
That's
want
right.
to take that 50, you go to your bank, you got 50 in there and you take out 15,000. Well, now you got 35 and you're getting interest at 0.5% on 35 instead of 50.
Yeah.
And if you die, they're going to have 35,000. Where's the
That's
life
right.
insurance? They're still going to have way more,
That's right.
right?
But you
And
still
it's
have the
all
death
tax
benefit.
free.
Yeah.
It's all
It's
tax free, man.
There is so much to understand around life insurance properly structured, and most people buy life insurance the wrong way. And there's a proper way to purchase it and to fund it when you have retirement and living benefits in play. And it's so powerful, especially around this concept of the power of zero, because you're going to have no losses, you're going to have no taxes because the money that you pulled out is a loan and you're not taxed on loans. And you don't have any worries because these insurance companies have been around for like 200 plus years, most of them. They're like, I think this is Michael speaking. I think insurance companies are going to be the last companies to ever go out of business. Right.
Absolutely, man. And
And
there's actually one of the carriers we work with. I mean, please call us because you got to change your mindset on life insurance. Please change your mindset on life insurance. Look at it as part of your retirement plan,
yes,
not just like, well, I got to have it in case I die. Yeah, so many people casually just when we go over their life insurance during our meeting, they're just like, no, or I got a policy that, it's 15,000 or one, but I think it's going to expire in a few years. haphazardly just casually do it, and they're like so proud of the middle bucket money they got. So
Yeah.
proud, even though the government owns 30% of it.
Yeah.
But they have this potential to do so much more over here. And one of the carriers we work with, this is so cool. I found out like a few weeks ago, they were the life insurance company for Abraham Lincoln.
Oh, really?
Isn't
Oh,
that
how cool.
crazy? One of the
Yeah.
insurance companies we work with, it's part of their like, that's something to be proud of, right? They paid
Origin
the little
story.
claim
Yeah.
to Abraham Lincoln's family when he got shot. Isn't that
How
amazing?
cool.
So how's
Yeah.
that? How long they been around, right? That's a long time.
That's a
You know
long
what I
time. I don't know
mean?
what that is, but
A long time,
yeah.
160 whatever years.
History is not my thing. But
Right. That is so
um,
neat. So these companies are around, Mike, like you said.
yeah.
They know what they're doing. They know how to calculate things, and their insurance products, they get better every year because things
Yeah.
are more competitive. As within any industry, no
Yeah.
matter what it is, companies try to be more competitive to outdo other avenues
And
and resources.
well, yeah, and this is a great time to jump in here as we wrap this session up. Is and maybe the next one we need to go through myths of and disbeliefs or things, because we've talked about life insurance and people have heard about life insurance and they kind of have a bad taste in their mouth because they haven't been properly educated. Same thing's true with annuities. And people say, I don't know about it, because 20, 30, 40 years ago, annuities, they weren't that great. Today, they are an amazing vehicle that can help you have no losses, no taxes, no worries. And as you want to retire at new heights, a lot of what we're talking about is this power of zero as a retirement mindset, right? So why don't we take next session, Johnny, and talk about kind of this mindset we have to really should have as we go into these retirement years, and let's talk about that because that would be a really fun discussion, I think. You up for that?
Oh yeah, man. That's one of the things that's one of the biggest hurdles. It isn't like people not wanting to do these things or thinking stuff fits their thing. It's the hurdles is like what we heard about certain types of
Right.
products.
Yeah.
You know what I mean? We just hear about them and we think, well, even though that matches exactly what fits everything that accomplishes my goal, because it's this,
Yes.
I don't know,
That's right.
right? And
Yeah.
so the mindset is a dangerous thing for a lot of different areas of our life if we aren't careful.
That's
So
right. All right.
anyway,
Well,
yeah, let's get into that.
let's talk about the power of zero retirement mindset next time on your podcast, Johnny. Go have a great week, buddy.
You too, man. Thanks.